Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Thursday. And we're sitting here now on the 21st of August, 2025, about 5:20 p.m. Central Time. And, you're just now doing this with your thumb, back and forth. At 9 o'clock in the morning, Fed Chair Powell will be speaking at the symposium in Jackson Hole. It's the Kansas City Symposium in Jackson Hole, Wyoming. And it'll be the lead-off big speech, and of course there'll be others after that. Other central bankers will be talking throughout the day. It's an important day, period. The market has broken going into it, the speech. Everybody's saying the Fed's going to tip a hand. He's not going to tip his hand. I want to go on record that he's going to stay neutral. Why would he change his position from being data dependent? I was worried when I saw the Fed going into the Fed minutes that maybe more than two members were really leaning into cuts. And I'm not seeing that. I saw that the two that did it, and everybody else. In fact, those coming out right now, and we've had a few. We had Schmidt from the Kansas City Fed. He was out this morning. If he had a vote right now, we'd say that he's standing pat. Others have done, Holleran did it. I mean, there's a number of people coming out that are saying that. And as they're saying that, I understand what they're saying. Given the data at hand, they've got a CPI and a PPI that's showing inflation is starting to show up. I didn't say it's running. I didn't say it's rampant. It's showing up. If they cut interest rates, they feed into that. They'd be cutting interest rates if the labor market were super weak. We're not getting that. We haven't seen anything that says that is the case yet. It could happen, but we're not there. So I think the Fed Chair Powell that we've seen is the Fed Chair Powell we're going to get. And that could be disappointing for bulls and bears tomorrow alike. We're going to get a cattle on feed report at 2 o'clock, and that's really it for all the day's news. So, as I said, you're getting some short covering tonight because we've broken 5 days in a row in the S&P with lower closes. You're due for a snapback going into this report, which could go, as I said, either way at this point. We've had rallies in the energy markets because Russia's laid out totally new terms for what a peace deal could look like, and they're just not acceptable. I'm speaking for Ukraine like I can't, but logic tells you they'll never accept anything like that. Israel tonight is bombing Gaza City again. It's, the answer to Egypt and Qatar is yes, we'd like to talk and negotiate as we continue bombing. And we're going to call up 60,000 more reservists because we want all of the hostages back. We want Hamas to lay down its arms. Then there's peace at hand. I've just given you where this thing is headed. That's the only way that it ends right now. I don't know what the future holds. In looking at gold, it's just looking and saying, do we have inflation? Don't we? Which way's the Fed going? What should I do right here? What's the uncertainties? The dollar got a lift. I think the dollar's telling you that the Fed's staying where it's at. And that's still a restrictive interest rate, not a cut, and that gives a bid back to the dollar temporarily because other currencies, New Zealand, Australia, they're cutting. In the yen, I think rallies right now are problematic for that, but I think that you got to be careful going into the Fed speech because anything can happen. Anything he says can set markets off in a tither. Why step in front of that train? Come in after the fact. You'll say you want to catch that because you know what he's going to say. I say congratulations, you're clairvoyant. In the bonds and the notes, what you've got here is a stable market going in. So as I take a look at the market, we are down 1.19% in the S&P going into Friday. When we look at the S&P here, we came up, we made new highs, we've backed off a little bit. We're not getting any crazy action, but it is sort of back and forth right here, as you can see. And the current action is happening around the 18-day average of closes. The market has numerous times tried the upper Bollinger Band, couldn't get through it. Only one time at the beginning of August did we try the lower part, and we tried the lower part at the beginning of July. Maybe that's what we should be looking at. Beginning of each month, it goes to the Bollinger Band and bounces right back for you. Momentum-wise, the market's no longer in overbought territory. So I see a neutral chart, neutral momentum, the bias down since you're under the 18-day average. In the NASDAQ, I see the same pattern. I see a higher high, a lower low. You're under the 18-day average, falling, not in oversold territory. The Dow and the Russell are the two strongest. And the Russell, the strongest, as the bottom pickers, the widow makers, as we like to call them in the trade, because that's what it's proven to be over time in the Russell. I'm making a facetious statement, so don't write me about it. We'll see if those people are finally right. 2 months ago, I went on record saying you don't want to be short the Russell anymore. A month and a half ago. I feel confident in that statement. Higher lows, higher highs, bullish. Overbought, but bullish. Not bullish in the Russell, lower highs, lower lows, but look where it went back to. How often do you hear me talk in these videos that the line in the sand in the market's the 18-day average of closes? Markets like to go to that number to figure out what they're doing. You have a market that has upside bias when it's over that number, but if the swing line turns down, it's a break in a bull market, bull bias market, which you have. You turn full-fledged bearish by taking out 2257.70 and closing under 2257. That would be very bearish, in my opinion, on the charts. In the DAX, it acts like it wants to go back, like the Russell just did, to the 18-day average and maybe hang there. Overbought, the way to correct it, it's not trying to embed, is break a little lower towards that 18-day average and sit there a bit. Bonds and notes, downtrend in the bonds. You're at the 100-day average for a week plus. It has gone to that number, and it seems to just be sitting there waiting for the next piece of information. It is an oversold market. You're pressing an oversold market if you go short. That's the only thing I can say. 5-year note, the same thing, but instead of the 100-day average in play, it's the 18, but the trend and the bias are down. First support comes in at that 108 zone. In the dollar index, this is the first close back over the 18-day average since just about a week and a half, 2 weeks ago, as you can see here. Will it have any momentum? That's the question. It didn't last time. I don't know if it will this time. The trend is up, the bias is up, and the momentum is up. First target, the 100-day average in green at 98.67.5. And the bearish part of the market, because the flip-flop, the mirror, 57% of the dollar index is made of the euro currency, is it's gone to the 18-day average. And if it settles under it, then it's got the bearish bias, the bearish momentum, and maybe it's going down here. We'll find out how the market reacts to whatever the Fed chair says. Day after day, I've been saying I wouldn't be surprised if we come back and challenge the 18-day average in the British pound and you're there. This is still a bullish market, not a bearish market. These are the areas of support. You'd have to take out the low back here in order to break that pattern. In Bitcoin, you're in a correction to the downside. You're up 400 tonight, but you're down pretty good today. And we'll see, you're pushing the $112,000 an ounce number. This was 125, so it's given that back in fast order. We'll see where it goes. If you take out, I would say if you take out the highs, let me come back to that. The highs of today, Thursday, that'd be a sign that you're going to go back to the 116,000 area, in my opinion. In the crude oil, I was looking for a bear market rally to carry up to the 18-day average. You're there. The same thing here. Why? Because if Russia plays its cards the way it is, they're going to force the fiddle player. In other words, Putin's playing, Trump's playing it all right? Putin has the number of Trump. He knows how to play his ego, what he's doing. Trump has to wake up our president and realize he's being played. He probably realizes it. He's asking, what are my alternatives that make sense? That's where I think he's at. He'd like to see the war ended. I'll give him the benefit of the doubt. He keeps saying it. I don't think it can end. I think it only ends on Russia's terms until you hit Russia with sanctions that cripple their crude oil traffic. That's what I think. I'm probably wrong, but that's what I think. So I'm looking for the market up through there. Gasoline has come alive all of a sudden. Look at that. Not 190, it's crawling. It'll get the president's attention if it gets near $2. You watch that. And in that gas, you're due for a bounce. The market here is so oversold. A bounce is likely. You put more into storage today, but nowhere near the amount they were looking for, half of it. So they're looking for only 25 billion cubic feet into storage. They took about what I think it was about 13 went in. So figure half, and that gave you a little bounce, but it didn't change the game. A game changer for you is education. And if you learn how to work technical indicators, it's another tool in your mailbag. I think I know how to work with them. What we've put together are 2 volumes here of understanding this, and it covers everything, be it trend lines, different types of charts, Gann, Fibonacci, moving averages. It'll cover stochastics, fast, slow, exponential. There's all types you can play with in there. Market sentiment, what do traders look for from there? Chart patterns that they look for. And it's all laid out just like this. You can print it out, put it on your desktop. You can keep it as a PDF and refer to it. We send everything by email. So all you have to do is go to this website, move your cursor up there, or go to iraepstein.com. That's iraepstein.com, and look for the free offers. When you get there, choose Guides, Volumes, Technical Indicators 1 and 2. I'm Ira. You have yourself a great evening. I'll catch up with everybody in the morning as we try to figure out what the Fed Chair is doing and take it from there. My weekend updates are going to be important, so I hope to see you with these updates tomorrow. Take care.